Hi everybody, this is Ellman, the blue collar investor, with today's covered call writing question of the day. And we have another great question today from one of our members, this one from Edward of Fruitland, Delaware. Alan, I'm a brand new member. Welcome, Edward. Without much experience in the market. I'm looking at this month's running list and I noticed that the majority of the stock have earnings reports due this next options period. My question is whether this is normal and whether an earnings report due 3 days before the new option period is sufficient to clear the stock. Well, Edward, in the BCI methodology, we never ever write a covered call with an upcoming earnings report in that contract period. Now, if a company is going to report 3 days before that period, we still must wait for that report to pass before using that security for covered call writing. Now let's take a look at the running list that you alluded to in your question. On the screen you could see at the top of the running list there are many stocks that are highlighted with gold rows. Those are stocks that have passed all the BCI screens, however have upcoming earnings report in the next contract cycle. Therefore, those stocks are not eligible at the beginning of the contract cycle. Now, if you take a look below those gold rows, you'll see some stocks in white cells. Those are stocks that have passed all the BCI screens and do not have an earnings report in the upcoming cycle. So those securities are eligible in the next cycle. And in a normal report, you'll find about 10 securities in that category. So that's the first of the 3 pools of stocks that we could use during what we call earnings season. And earnings season, by the way, Edward, comes up 4 times a year because most companies report quarterly. So at this point in time, we have about 10 eligible securities. Now, in the next slide, you'll see at the very top of the running list, you'll notice that 8 of those securities, highlighted with the red arrows, actually report during the first week of the next cycle. So once those earnings reports pass, those become eligible securities. As long as the stock doesn't take a price hit due to a negative report, we could use those once the report passes. So now we have 8 more securities to use in addition to the 10 that we had originally. So that's the second of the 3 pools of eligible securities. The third pool are exchange-traded funds. And we provide our members with a report every week of a list of eligible ETFs for covered call writing. On the screenshot in front of you, you see one of the pages in the 6-page report. Normally, there'll be about 25 securities on the ETF report. So if we take those 25 securities and add it to the 18 that we had before, we have more than 40 eligible securities for covered call writing even during earnings season. So that's how we circumnavigate the issue of earnings reports on a quarterly basis. Edward, that was a fabulous question because it's something that all of us covered call writers have to deal with on a regular basis. So knowing how to find eligible securities and not taking the risk of writing calls with upcoming earnings report will enhance our profit levels to the highest possible points. So thanks so much, Edward, for asking that question. And thanks to all of our viewers for watching this video. As always, this is Ellman, the blue collar investor. Take care, everybody.